Dear viewer, this is the only trip around the world that not only won't cost you money, but will actually make you money. With this trip around the world, you will defeat inflation and interest on your savings account or any investment product that your local advisor, bank, or insurance salesperson has ever tried to sell you. Since October 2016, some investors are already on this spectacular trip and have already achieved a 146.95% return on their investment. And you can achieve that as well, as trend-following expert Michael Proffe takes you now on his global stock trip with his Proffe's Global Growth Portfolio. Here, you will be greeted by a strategy that will take away any fear and worry that you have ever had with the stock market. Investing money in stocks is not only lucrative for you, but also very secure. Michael Proffe has already proven this over and over again. Nearly 150% profit in less than 5 years is a great achievement. Now, Michael Proffe will show you in this simple presentation that you do not have to fear the stock market and how you can avoid pitfalls and mistakes. Pitfalls that have cost investors money and brought a bad name to investing, although they deserved it, but not to worry. Michael Proffe's Global Growth Portfolio is the fairy tale story to a better and more independent financial future. Maybe you are asking yourself, what does all of this have to do with a trip around the world? Well, dear viewers, your last big trip probably was a while ago, right? You don't need to be a psychic to make this statement. The current pandemic put a stop to your vacation plans or that relaxing cruise that you had planned. But you know what? Today you will go on that trip around the world. It's not dangerous as you will travel virtually, and this world trip has one crucial advantage. You can earn money. Enough money to easily pay for your next trip in late 2021 perhaps, and enough to find that you will be able to afford a little luxury again. This trip will be truly life-changing, as we are not only talking about a vacation, we are also talking about building substantial personal wealth. How does it work? Today I'll tell you which stocks to invest in to build up your assets. I offer you exclusive insight into my global growth portfolio, a successful portfolio which has increased by nearly 150% over less than 5 years. That means that with Proffe's Global Growth Portfolio, Michael Proffe not only outperforms your savings account, life insurance, and annuities with his eyes closed, but also with both hands behind his back. Before I tell you more, let me introduce myself. I am a longtime employee of Michael Proffe's team, and I will show you how you can build a stock portfolio. I will also show you how you can avoid mistakes with Michael Proffe's white paper, The 7 Psychological Pitfalls that you as an investor need to know. You might have heard my name before or seen me on TV. If so, you already know that I've been using this trendsetter strategy to enable people to build wealth for many, many years, and with great success. Michael Proffe and his trendsetter strategy is good at this, actually very good, and mainly because he has been doing this exclusively for 30 years. However, in all those years, there is one thing that drives Michael, and that is to convince people that investing in shares is not only lucrative, but also a safe and fantastic way to build wealth. Still, there is one thing that Michael Proffe has not yet achieved, and it bothers the entire team colossally. He has not found a way to convince the majority of people that investing in stocks is not only lucrative, but also safe, but we will never give up. His portfolio is successful, and he has helped so many people build a lucrative portfolio that has given them wealth. This is the reason why I am talking to you in this video message, and I want to show you how you can double your money with Michael Proffe's trend-following strategy in less than 5 years using carefully selected stocks. And now you might be asking yourself, stocks, aren't they high risk? I can't tell you how often I've heard this concern, and each time I reply, no, they really aren't. I'll expand on this in a moment, but first let me ask you a question. What is a safe alternative to stocks? Did I hear anyone mention savings interest? Okay, let's take a look at this option. I just entered savings interest on Google and this is what comes up. You can see here how providers outdo each other. 0.22% says the first. Wow. The next offer clearly outbids the first with 0.50%. Unbelievable. And the third goes all out with 1%. That is hard to keep up with for stocks, especially those that have given 150% return on investment from the Proffe's Global Growth Portfolio. I could easily sound sarcastic, but please consider this yourself. Even in the best-case scenario of 1%, it would take 70 years for you to double your money. And the reality is, with an inflation rate of 1.4%, your investment will effectively shrink year after year. A savings account is only good at reducing the loss caused by inflation. We really should not speak of this as a form of investment, and I don't even want to start talking about life insurance, as that will be even worse. One thing is obvious. Stocks are far more lucrative. Only if you know what to buy, of course, and that is what I would like to show you. Another thing we often hear is, stocks, what happens if the share prices fall? Share prices rise and fall, and I understand people's concerns. What if I use my savings to buy shares in a certain company and 2 weeks later the share price falls by 10%? Then I would have been much better off had I gone with the 1% offered by a savings account, right? This statement highlights 3 misconceptions. Misconception number 1, all eggs in one basket. Never put all your eggs in one basket. The saying is old, but true. Anyone investing their entire savings in a single company is taking a high risk without having to do so. For that reason, I have selected 20 stocks for the portfolio I'm introducing here today. This way, the risk is reduced considerably. I take things one step further. My portfolio is called Proffe's Global Growth Portfolio, and for a good reason. I spread my investments not only across different companies and industries, but also across countries and continents. This broad approach keeps the portfolio stable even in the event of a regional crisis. Misconception number 2. Share investments involves gambling. I am aware that there are people who have had bad experiences. For example, with telecom shares or the dot-com bubble. Yet I can wholeheartedly say that stocks are a safe way of investing. Shares are bought at a certain price point. Share prices can go up or down, and at the point of sale, you make a loss or a gain. If you look at it in this simplified way, you can see that there is indeed a certain risk. But this is not the whole picture. Here is the key to understanding stocks. A share is much more than just a security. It is an equity instrument that represents a small portion of company ownership. When you buy a share in a company, you become co-owner. A small part of this company now belongs to you. Admittedly, we are talking about a very small part, but you have given your money to this company. I can't stress this enough. This has absolutely nothing to do with gambling or speculation. Point made. If you buy the stocks that I have selected for you, well, we will come to that in a minute. Misconception number 3. Short-term declines in share price are a reason to panic. To the untrained eye, stock prices might look like a roller coaster going up and down, and I can see why. On closer inspection, however, you will notice that certain stocks quickly recover after short-term declines, and over time, they continuously climb higher and higher. Take a look at this. Does that not look good or what? What we see here is that the Microsoft shares are falling from $206 to $159.68 between February 14, 2020 and March 13, 2020. This amounts to a decrease in share price of about 22%. Surely this is a disaster for anyone invested in Microsoft, right? Now please have a look at this. This chart also shows the development of Microsoft. And as you can see, on February 12, 2021, the share price has reached a whopping $245. The loss of $46.32 noted in March of last year was not only made up for, but the share price increased by another $39. By the time you are watching this, share prices might have decreased a little, but who cares? Microsoft will recover from short-term lows and bounce back stronger and stronger. Why? Because Microsoft is a trend-following stock, and trend-following stocks are the reason why you should go on a stock journey around the world with Michael Proffe. They are the reason why readers of Proffe's Global Growth Portfolio have achieved nearly 150% profit in less than 5 years. Trendsetters are the best of all listed companies. Trendsetters are companies with a successful business model that is tied to a long-term trend. Microsoft is such a company, and let me tell you a little secret. Microsoft is of course already part of my global growth portfolio. This company is indeed part of a well-established long-term trend. Globally, hundreds of millions of people use Microsoft products on their PCs and will continue to do so in the next 5 or even 10 years from now. Companies like Microsoft produce products that serve a megatrend and therefore have a high chance of being successful. So if you invest in a company like this, and with these success rates you really should, then it is important to be aware of megatrends, and this is exactly what I am here to help you with. My Trendsetter strategy is your guide to securely building your wealth. I have been dealing with stocks since the 1980s. While studying industrial engineering, I developed and tested various systems that would be able to identify the best stocks to generate long-term profits. Of course, I experienced setbacks, but each one helped me on my way to success. Once my strategy was fully developed, I shared it through my first financial newsletter. But how does a financial newsletter work? That is really simple, at least for those that read Proffe's Global Growth Portfolio. You only have to follow these 4 easy steps. Using my Trendsetter strategy, I select stocks that only know one direction in the medium and long term, and that direction is up. I use these selected stocks to create my portfolio, and in my monthly publication known as Proffe's Global Growth Portfolio, I tell you exactly which stocks to buy. Every month, you will receive a brand new issue full of useful information on the subjects connected to the megatrend portfolio stocks, the current state of the portfolio, and instructions to buy or sell if necessary. All you have to do is build your portfolio and follow my trading recommendations. You will never be asked to hand over money to us, and you will always be in complete control of your own portfolio. You can sit back, relax, and watch how your portfolio will grow and grow and grow over time. I said it before, 146.95% return since October 2016. These numbers speak for themselves. I opened the portfolio in October 2016. If you invested $36,567 then, you would now own a portfolio worth $90,302, an increase of 150% achieved by solid and secure stock investments in well-known companies such as Microsoft. No gambling, no short-term buying and selling, no shaky startups, and no cryptocurrencies. Just stocks and nothing else. See this stunning success story illustrated in the chart below. Proffe's Global Growth Portfolio achieved a return on investment of 146.95% since October 2016. Also, if you take a look at the big V shape in March 2020, you could conclude Michael Proffe's stocks took a dive, and yes, you are correct. But this was a big corona market correction that we had at the beginning of 2020. And even at its lowest point, the portfolio was still worth more than when we started out. You can also see that the portfolio had a fantastic recovery. Perhaps you have been thinking for a while about creating your stock portfolio. You might be wondering, is now the right time? Are some experts saying that the next crash is just around the corner? Maybe I should wait? No. A great advantage of following megatrend stocks is that you can get in at any time. In the long term, events like a financial crash or the corona crisis cannot disrupt the successful development of trendsetter stocks. Even if the stock prices sag a little, it's never long until they perk up and climb to new heights. Many thousands of readers have already joined me on my path to success. Read what some of them have written to me. Dear Mr. Proffe, I am delighted with your trendsetter strategy simply because it is easy and straightforward for everyone to use thanks to your monthly publications. What you ultimately gave me is a better understanding of the economy and a steadily growing interest in the stock market. Thank you, and I look forward to seeing you soon at one of your next events. With best regards, Werner Schmidt. Hello, Mr. Proffe. To sum up your service, I only need one word: great. I haven't met anyone else who hits the nail on the head more poignantly. And achieving fantastic returns at the same time is simply great fun. I look forward to every issue, and I would love to see more of you on television. Thank you for your effort. With best regards, Heiko Sattler. Now you can profit just like these happy subscribers of Proffe's Global Growth Portfolio. Just like them, you can also go on this trip around the world and go the secure way with Michael Proffe and his trend-following strategy.